會㗎，你係啊，room one 哦，OK， 好嚇，各位同事，我哋咧夠。
Members, we have a quorum. It is also the appointed time I call the meeting to order. First of all, we have to elect the chairman. Any nominations? Mr. Wong Ting Kwong nominates Mr. Kenneth Leung. Any seconder? Mr. Charles Smock. Any other nomination? Nothing? Okay, Mr. Kenneth Leung, you are returned the chairman.
你唔好做啦，
好。咁我哋而家就
Okay, let's start. First, let us invite the administration team to come in. They are from the Department of Justice, the Financial Services and the Treasury Bureau, and also from the Hong Kong Monetary Authority.
早晨啊，咁多位。
Good morning. I think you know the officials well. From the Financial Services and the Treasury Bureau, we have the Principal Assistant Secretary, Mr. Jackie Liu, and then Mr. Daryl Ho from the Hong Kong Monetary Authority, Ms. Carrie Chan, Hong Kong Monetary Authority, and then Ms. Jenny Lee, Assistant Secretary for FSTB, and also Ms. Selina Lau, Acting Senior Assistant Law Draftsman from the DOJ. Can I now ask the Bureau to walk us through the bill? Please. Mr. Liu. Sure, Mr. Chairman. Good morning, members. Today we are going to discuss the Loans Amendment Bill 2014. The objective of the bill is very clear and also very simple, and that is to allow the government bond program to issue Islamic bonds or sukuk. I think members will remember that in July last year, we passed the amendment bill, which is the Inland Revenue and Stamp Duty Legislation Alternative Bonds Schemes Amendment Ordinance 2013, and that is to provide Islamic bonds with a comparative taxation framework for traditional bonds. After the bill was passed in July and after the Gazette for a week, it has come into effect. Right now, there is a taxation framework for the issue of sukuk. And we have also got very good financial intermediaries and also sound market infrastructure. That kind of framework allows Hong Kong to promote financial services which are Sharia compliant. We can also encourage more issuers to issue sukuks in Hong Kong in order to do financing, in order that we can allow the market to continue and also to expand. We are of the view that the GBP can also, according to the needs and situation in the market, directly issue sukuk for financing. We believe that under the GBP, if we can also issue sukuk, it is actually going to be very positive for the market, because the market will understand the laws of Hong Kong, our regulatory regime, our taxation framework, etc. They will know that all these are very comprehensive and they are enough to support international private and public issuers to come to Hong Kong to issue sukuk for financing. One more thing, Mr. Chairman, in the international capital market, highly rated sukuks have always been lacking. The Hong Kong SARG is one of the few regions with AAA rating in the region. And if we can issue sukuk under GBP, then we believe we can arouse the interest and attention in the global market, so we can attract a new group of investors from the Middle East and other parts of the world to Hong Kong's financial platform. That is, they will have an interest in sukuk issued in Hong Kong. In fact, a number of overseas jurisdictions, such as Malaysia, Indonesia, and other regions, have issued sovereign sukuk to develop their Islamic markets so as to open up their sukuk market. In fact, in October last year, the UK also announced that they would consider issuing sukuk in 2014. In view of this, we hope we will not lag behind because Hong Kong is an international financial market. In the traditional financial market, we have been doing very well already, but for the sake of market development, if the GBP can do something extra, and that is to issue sukuk under GBP, we can attract more institutional investors who would like to diversify their investment. Therefore, we propose to amend the loans ordinance loans ordinance. I believe you've got the bill already. It is not very complicated. It's quite short, just a few pages. We have decided on this policy of issuing sukuk, and we have taken reference from the existing loans ordinance, and we have found that with regard to the existing loans ordinance, the sukuk framework may not totally comply with the GBP requirements. This is because they have to comply with sukuk laws, which is Sharia. In terms of the product portfolio, we will have to set up special purpose vehicles, and also there might be multiple asset transfers. Such kind of issue is not the same as traditional bonds issue because we do not have to package the relevant products in traditional bond issuance. Therefore, we have explained that even if there will be the issue of sukuk, we may not entirely subsume that as borrowing. In the prevailing context of the loans ordinance, we therefore need to amend the loans ordinance to encompass such a situation in which the government shall be regarded as borrowing monies from the SPV set up to effect sukuk issuance. It is fortunate that in July last year we adopted the Inland Revenue and Stamp Duty legislation, and therefore there is already a very comprehensive framework in existing laws for introducing the concept of sukuk. Actually, under the IRD, we have the concept of specified alternative bond scheme. This would cover the situation where the government raises funds by way of sukuk issuance. We therefore propose to invoke Schedule 17A of the IRO in order to expand the definition of borrow or borrowing under the loans ordinance so that we can issue sukuk to raise funds. There are two other complementary amendments. We would amend the bond fund resolution so we can via the funds under the bond fund, including coupon and redemption payments, so that sukuk holders can pay the monies for issuance. And also, we are going to amend Section 26 of the IRA to pay the expenses incurred in relation to the issuance of sukuk under the GBP. In other words, that they can enjoy the same profits tax exemption as that currently applicable to interest payments and disposal gains in relation to conventional GP. You remember that on the 2nd of December last year, we introduced the idea to the FAP, and in the last half year, the Hong Kong MA and the Bureau have done a lot to liaise with market players to introduce the relevant concept. We understand that the experts on sukuk in Hong Kong do support the direction we are taking. We therefore would like to enlist the support of LegCo ASAP so we can support and pass the bill ASAP. This is my introduction, and I would be very happy to take questions. Thank you. Thank you, Mr. Liu. Members, any questions on Mr. Liu's introduction or the paper? There will be no time limit. Please feel free. Mr. Charles Mock, let's ask a short question. To Hong Kong, if Sukuk is issued, what do you think will be the benefit for the market in the short and long terms? In other words, how would that benefit the development of the market? I will kick off and then the Hong Kong MA colleague can supplement. Last year, in July, after passing the Inland Revenue and Stamp Duty legislation, we have heard from different channels that different issuers would like to make use of Hong Kong's financial platform to issue bonds. As you know, we do not, in fact, have a lot of experience in this. There are many experts in Hong Kong who do legal work or draft legal papers and also provide banking or accounting services as intermediaries to support Sukuk development in the region. However, in Hong Kong, there is still a lot of room to develop Sukuk. And in view of that situation, we believe that we can make use of the GBP and issue Sukuk once, so as to also set the market standards for Sukuk issue. In other words, there will be a benchmark for the yield curve, and that would be very good reference for the market. But in the long term, it depends on the market itself. In the past year, the global Sukuk issuance has reached 120 billion US dollars. In Hong Kong, there is a lot of room for development. And in the region, Malaysia takes up 70% of global Sukuk issuance. In the past year, we have talked to the monetary authority and the banking sector to learn from their experience to see how we can develop the business in this regard. I'd like to see whether the Hong Kong MA would like to add. Mr. Ho. Thank you, Chairman. The question asked about market potential. This has to do with our market positioning vis-à-vis Sukuk issue. We are of the view that our advantage is that as an international financial center, we can allow investors to make use of our market to do financing. One of the ways is to issue traditional bonds so that those investors can come to Hong Kong to use it as a funding tool. This has always been done, but Sukuk may be different from traditional bonds. And if large enterprises who would like to make use of Hong Kong as a funding platform, then they would be able to use Sukuk to expand their base of potential investors. Therefore, to issue Sukuk, we'll be able to erect such a platform and then to strengthen our advantage for raising funds so that Hong Kong international enterprises will be happy to make use of this platform.
So overseas companies, if they want to raise funds, then they can also target investors in Islamic countries, right? So they can come to Hong Kong or Malaysia to issue Sukuk. Now, you talked about a government Sukuk program. So is the government going to issue Sukuk? That is, the government also would like to invite investors to invest in Sukuk in Hong Kong. Well, how big will that scale be? Yes, you are right. We hope that we can promote the Sukuk market together with private issuers. And we hope that there will be more private issuers here. In Hong Kong, we also have our government bond program, and the GBP will also be issuing sukuks. We want to attract investors from or institutional investors or even their central banks to come to buy our high-quality sukuks. And even for some conventional funds, because they want to diversify their investments, now they may not have an Islamic background, but they would also like to invest in sukuks. As for the size of our issuance, we are still calculating. Now, because we need to have the law passed first, then we will have a legal basis for us to make the preparation for issuance. We have made a reference to other companies' issuance experience, and we have also looked at our scale. In the beginning, we may not be of a big size. I think 500 million Hong Kong dollars, and it will be in US dollars. But we have not decided on a size yet. Because the market situation would change, so we cannot decide on a scale now. We have to look at market need at the time of issuance. But when we start, we will not be sizable. We will have to monitor the interest in the market first. You're talking about the government. We do not know about the private sector. You're right. I would like to follow up. Now, of course, we support that our bond markets be more diversified. However, Chairman, you know that we have been, as depicted in the newspaper, feeding each other with lemon. So I think actually we are not confronting each other. We are just talking about different markets. Now, when the government considers issuing sukuk, now you have plans in this area concerning Islamic markets, but how about other products? Now, have you had internal discussions on diversification of future investment? Now you are starting with a small scale, so you may also try other types of bonds. Well, under the GBP, there is no rules as to what kind of currency we should use. However, since we launched the GBP, we have been introducing products in Hong Kong dollars. But now we will look at the market practice when it comes to sukuk. We have witnessed other sovereignty countries when they issue sukuk, most of them would issue in US dollars. And because that will have a stronger power for raising funds, some would use their local currency, for example, Malaysian or Indonesian or Middle East currencies. We have not made up our mind yet as to whether we will use US dollar or Hong Kong dollar. That's the possibility of using either one. Now, just now you talked about Hong Kong dollar bond and its development in the future. Well, when we look at the bond market in Hong Kong for the past 10 years, development has been stable up to the end of last month. Well, for Hong Kong dollar bond or outstanding amount, it reached $1,400 billion. So we will have to rely on the hard work of the market people, and we would also have to monitor the atmosphere of the market. So at the same time, interest will also be a factor. So for different years, there may be different room for development. And for companies, if they can raise funds through other means, they may not use bond. But of course, we support companies raising funds in Hong Kong through bonds. Thank you, Chairman. As Mr. Liu said just now, for the Hong Kong dollar bond market, I think is already quite diversified because we don't just have GBP in Hong Kong. There are also other markets players. For those companies that need Hong Kong dollar, they would also take part in this market. And also there are some multilateral banks or some mainland financial institutions. Now, they may need US dollars. However, our market is very efficient. So after saving a sum of Hong Kong dollar, they would make investment. So for our market players, there are also they are of different categories. So we will continue to make use of the GBP to promote the development of Hong Kong dollar bonds. Mr. Wong Ping Kwong. Thank you, Chairman. Hong Kong is an international financial center. I'm not saying we are the only one, but we are one of the major centers, so we should have more diversified products. I think that is essential. As the administration said just now, we are developing Sukuk market, but we are a bit late in starting. Now, when we compare with Malaysia and some other Islamic countries, we are now just starting. Just now, we talked about Malaysia, and the Sukuk issued by it has taken up 70% of the market. So how about our competitiveness? I'm quite concerned about that. Now, we are making so much effort to issue Sukuk. And for the Sukuk market, yes, it has its characteristics. And this characteristics are based on religion. In Hong Kong, we do not have many Muslims. Many Islamic countries do not really understand Hong Kong. Well, they would have more communications with other Islamic countries. So if Hong Kong is to issue Sukuk, or if these countries would like to buy Sukuk, they would go to markets that they are more familiar with. So for our government or the monetary fund, what's their assessment? Do you really think that we can take up a share in the Islamic financial market? And just now you said that the US is also all poised to do it. And the US is the leader in the international financial market. So we are competing with old issuers and a strong newcomer. So what will our status be in the future Islamic financial market? Mr. Liu, well, I would like to thank Mr. Wong for his observation. That's very good. When it comes to competitiveness, I understand that there is a lot of room for us to improve. Well, as we said just now, Malaysia is a very sizable market. Well, actually, we have a lot to learn from them. Well, between Hong Kong and Malaysia, we have many bilateral relationships, and we communicate with each other frequently, and there are things we should learn from them. Now, for Hong Kong, we have our advantages. We have very strong intermediaries, for example, our law firms, our accountants, our banks. And they are not just local organizations. They also have very good international connections. And the Hong Kong government, well, it has it's an excellent credit rating in our region. So when investors look for investments, they would also look at credit rating. Now, there are only 2 places in Asia with AAA, Hong Kong and Singapore. So if the Hong Kong government issues Sukuk under the GBP, some Middle East investors or central banks, well, in order to diversify their investment portfolios, well, they would be interested in our Sukuk as well. Now, for these clients, now they may not always come to Hong Kong because there are restrictions when it comes to conventional financial instruments. So this time around, we are not only issuing Sukuk, we also want to bring in the surplus capital from the Middle East. So for issuing Sukuk, it actually will provide a good window for us to attract this kind of investors who come to Hong Kong. Now, some other cities also have their eyes on these capital as well. Now, the UK is not an Islamic country. However, the Prime Minister in October last year also said that they will be issuing Sukuk and the government will take the lead. Of course, we'll be facing a lot of challenges when we do this. And we still have to learn a lot from other financial markets. So when we issue the first batch of Sukuk, we will do a lot of publicity, and also we will cooperate with intermediaries such as banks to promote the financial markets of Hong Kong. By doing so, the markets will have more confidence in Hong Kong. So this is actually a matter of chicken and egg. If we do not do it, we will always lag behind. But if we take the first step, lot of positive things will follow. So we hope that we can get a green light from the LegCo. We will take the first step under the GBP. I think we can encourage more people to follow suit. Now, for developing Islamic financial markets or Sukuk in Hong Kong, I think the LegCo will support this positively, and we will cooperate with you. Well, as for my question, actually, I am very concerned about one thing. If we start now, what's our competitiveness in the Sukuk market? Now we are considering developing this market. Of course, we want to be successful. If not, why are we doing it? But to be successful, we have to find the right ways to do it. So we will be enhancing our promotions in Islamic countries. As for our economic and trade officers overseas, will they also be promoting Sukuk in other countries? Would this kind of measures be in place? If there's no publicity, then will you just be waiting for the clients to come to our door? That's impossible. Of course, we will have to reach out. So has the government considered all these? Yes, we have considered all these, and I would like to thank Mr. Wong for his reminder. In July last year, we enacted the Inland Revenue and Stamp Duty Legislation Alternative Bond Schemes Amendment Ordinance, and we have stepped up publicity ever since. And also through our ETO overseas, they have been helping us to promote, and also the Hong Kong MA has been conducting road shows in other countries. And in the future, while they are doing so, they will at the same time promote Hong Kong's Sukuk market. When our principal officials have overseas visits, they will also try their best to publicize our financial market.
And also after endorsing the Inland Revenue and Stamp Duty legislation, we are determined to develop such a market and also explain our advantages. We'll continue to do that and even do more. I'll see whether the Hong Kong MA would like to add. Mr. Ho? Thank you, Chair. Mr. Wong gave us a very good reminder, and that is how we should enhance our competitiveness in this regard. An important point is we need to leverage on the advantages we already have. Hong Kong itself is an international financial market. One of its main functions is to help the Greater China region to provide funding channels for enterprises which would like to raise funds. When we develop Islamic finance, we will incorporate this into it. In other words, when we compete with other financial markets like London, their advantage may not be able to take the place of our advantages. Say, for example, we may be serving large enterprises using Hong Kong as a base, and in that we have our own advantage. We like to build a platform so these enterprises can make use of the Hong Kong platform even more. As Mr. Liu was saying, the market development work of the Hong Kong MA also includes liaising with market participants to attract them to come to Hong Kong and use our platform. If we issue sukuk under GBP, it will be a golden opportunity for us to get into contact with the more important global Islamic investors and tell them that we have this platform and we will be able to issue sukuk here. And other enterprises that will follow will hear Hong Kong as one of the places where sukuk issuance is possible. Mr. Liu, anything to add? In the past, when we did promotion or publicity, we will introduce our existing advantages and that we have the framework. But very often, we lack the transaction volume or figures. And that point is actually important. If indeed we have this first sukuk issuance under GBP, then when we go out and introduce again, we will be able to include the number of issues or the transaction volumes and the reaction of the market, so we can be more concrete in telling people Hong Kong's advantage. Mr. Wong, any follow-up question? Sorry, Chairman. I need to go to the Executive Council for the EXCO meeting. Sorry, I have to go to a Electoral Commission meeting. I also have many questions. Let me ask you these questions. According to the paper you have given us, maybe you should turn to page 2. This is the background brief. The GBP is now having a figure of $200 billion. This is at the top of page 2. As at 15th of December 2013, a total of Hong Kong $107.5 billion worth of government bonds have been issued. I think our colleagues have asked the same question. The denomination of sukuk, is it that it can be any currency, including Hong Kong dollars? Can you confirm that point? Your understanding is correct, Chairman. When the LegCo approved the GBP in its resolution, the total amount that can be borrowed would be 200 billion Hong Kong dollars or equivalent. In other words, the relevant resolution allows the BBP to issue Hong Kong dollar denominated or other currency denominated bonds. The existing 107.5 billion Hong Kong dollars worth of government bonds, how much of that is Hong Kong dollar denominated? They are all in Hong Kong dollars. If later you issue sukuk, what criteria will you use to use a particular currency to issue sukuk, whether it be Hong Kong dollar or US dollar? Who can answer the question? Thank you, Mr. Chairman. The choice of currency would depend on the objective of the bond issue. We do not need to raise capital. We just want to develop the market. So in terms of currency, we would hope that the currency chosen will help us contact the biggest numbers of investors, so there will be more people taking part, and so that we can promote the sukuk platform to others. Therefore, we believe the US dollar is a more commonly used transaction tool in the international capital market. And my initial view or assessment will be that we will use US dollars. Mr. Liu, you said that internally our assessment is that the first issue would be in the tune of, or to the tune of $500 million. Would that be calculated in US dollars? Well, we haven't decided on the size of the first issue. We'll have to be mindful of the prevailing situation and the demand. Our initial view is that the first issue would be about 500 million to 1 billion US dollars. But we haven't made up our mind. We need to do a lot of research to see whether the market will be able to absorb that kind of issue size. And also we'll have to know whether the bill will be supported, so that we can act according to the framework in the bill in order to be within the parameters set. According to your experience, every time you issued GBs, there were institutional and also retail or individual investors. Do you have an objective of apportioning the bond issue for one type or the other type of investors? And also, will you have some kind of target investors, and whether you would assign a certain percentage of the issue to institutional investors? Thank you, Chairman. Our initial plan would be to target institutional investors first. In the first stage, we in fact have no intention to also attract retail investors in the first issue, because in the international capital or asset market, the investors in sukuk are mainly made up of or by institutional investors. Therefore, in our first issue of sukuk, our thinking will be to target international institutional investors. We have no intention to draw in any retail investors at the moment. But of course, given the future development of the market, if there is a demand, if there is room for doing so, and if there is a huge demand, we do not rule out our consideration of anything. Thank you. Just now you said that the government bond credit rating is AAA, and we are the only one in the region that can be at a par with the Singaporean sovereign bond. My question is whether the AAA was rated only by one such institution or by all credit rating agencies. And another question is for you and your team. The rating of a sovereign bond, if you want to achieve a high rating, what are the most important 2 or 3 factors? Would it be that we need to have a big enough reserve, or what kind of economic policies will there have to be before you can maintain a high rating for your bonds? Chairman, in the electrical brief, in Annex 4, we have talked about the credit rating. Actually, that one was given to us by Standard & Poor and Moody's. And another one have always been giving us very good ratings. So far in Asia, only 2 jurisdictions have got AAA from Standard & Poor's, and Hong Kong is one of them. And actually, Hong Kong has a very good and stable financial system, and we have a robust market as well. So, as you know, we have very handsome reserves, and therefore these credit rating agencies like Standard & Poor's, Moody's, and Fitch have great confidence in us. Sorry, Mr. Liu, which part of the paper are you talking about? I'm talking about the legislative brief. Can the clerk please help? It is footnote number 4. This explains how the credit rating has been given. Thank you then. Another question. This kind of sukuk or alternative bonds, this is not going to be issued by institutions but by the government itself. Do we have enough people or experts to deal in this kind of financial tools? I believe you need some kind of special training before you can do this. My other question is, every time there is an issue, do we need to set up an SPV, special purpose vehicle? If we have to set up an SPV every time there is an issue, now you have got this diagram which is very clear in explaining the issue. I'd like to know whether the SPV would be wholly owned by government as a subsidiary. Who can answer the question? Mr. Ho. Thank you, as Chairman. About your question on manpower and experts. Well, in the area of Islamic bonds, it is not possible for each issuer to train up a team of sukuk experts. So normally, we go through service providers in the market. For example, we can get a bank to do the coordination work. From what I know, within Asia, the 2 banks in the first 4 places are represented in Hong Kong, and they have a big team here. In the FA panel, we mentioned that legal experts are such that, in fact, Hong Kong lawyers or lawyers who use Hong Kong as a base have taken care of most sukuk issuance in Asia. So we have the people here, legally speaking. And when we embark on the exercise, we will go in that direction. And then the SPV. Whether we have to set up an SPV every time. Well, indeed, yes. Every time there is a sukuk issue, there has to be one SPV. And if we do it under GBP, then the government will have to set up the SPV itself. However, if it is a commercial issuer, perhaps they can get a third party, or they can set up a trust to entrust it with the functions of an SPV. We have seen that happen in the market. If we're only talking about sukuk to be issued by the government, then the SPV would be wholly owned by the government.
Just now, Mr. Liu mentioned that for each issuance of sukuk, the government would look for an arranger. And in the past, you have been issuing Hong Kong dollar bonds. So did you also do that? Did you also seek the help of banks and financial institutions as your arranger? Now we will have to look at the type of bond. Now if it's retail bond or I bond, it is of a special structure. And we will have to rely on financial institutions for retail. So we need to hire these arrangers. In 2004, the government issued the bonds for the 5 tunnels and 1 bridge. The government also hired banks as arrangers. As for conventional Hong Kong dollar bond issued for institutional investors, we have not hired arrangers. Now, if you look at the US or the UK and look at the government's bond plan, actually the government itself will be the arranger. So this is like what we've been doing under the Hong Kong MA for coupon. Well, you said it's not a genuine need for the government to issue sukuk, but you are just doing this for promoting an alternative bond. So for other institutions, if they want to use this tool, will they have to amend their relevant ordinance, for example, the airport authority? So will you have a plan to amend other public or statutory bodies' ordinance so that they can also do the borrowing? Yes, you are right. Now, the most important purpose of doing this is to promote the development of Islamic finance in Hong Kong. We really do not need to raise fund. Now, so we will have to amend the loans ordinance in order to do this through the GBP. We also encourage other public bodies to do this. Well, they can make use of different means to raise funds. Issuing bond is one of the ways. But also we have to look at the public bodies or even private bodies' needs. So do they really have a need to issue bonds? What collateral do they have? And how much capital do they need? And what is the interest rate, etc.? So we cannot mention all this in one breath. Now, we encourage different public bodies to make use of bonds or alternative bonds, that is sukuk, to raise funds. We will continue to do that. As to where they have room to do it, well, of course, we'll have to look at the actual situation. And legally, they have to look at their own ordinance and constitution, whether they have the power to do it. So different public bodies would have to look at their own principal legislation and consider their own situation. We cannot force this on other public bodies, saying that they have to use a certain way to raise funds. The administration and the Hong Kong MA will continue to encourage different bodies to make use of sukuk to issue bonds. And if there is a need, we will give them support. So you are saying that the government will look at the needs of these public bodies, and the FSTB will not say that you are changing all the relevant rules, right? So they will have to make their own decision. Mr. Lin Leung, I have asked all my first round questions. Do you have any questions? I just want to ask about one thing, Chairman. Just now I heard that well, there are a lot of legal practitioners or lawyers in Hong Kong that have been doing Islamic finance. So we do not have a shortage of talents. However, how about the protection for investors? Is SFC offering protection to the investors? Are they prepared enough? Of course, I dare not say that I know anything about Sharia, that is, the principles of Islamic laws. But when I look at the documents, it's a very complicated issue, and that's why we have to amend the law because, well, on the face of it, it doesn't look like a loan, but actually it's borrowing. So SFC is not used to doing this kind of regulation. Do we have enough regulator so that investors can be well protected? Thank you. Well, at previous meetings, we have also touched on this. Well, for the SFO in Hong Kong, there are provisions governing the issuance of bonds. And also we have to look at the targets of such bonds. If bonds are to be sold to retail clients in the SFO, there are detailed provisions. Well, for the SFO and companies ordinance, there are also certain exemptions. Now, if the sale of such bonds is targeting at private placements or institutional investors, etc., then there will be certain exemptions. So while we promote Sukuk, we will cooperate very closely with Hong Kong MA and SFC. As for the SFO and the company's ordinance, there are provisions concerning bond issuance, and these are already sufficient to protect investors. When it comes to sale behavior and offering. As for offering and advertisements under the SFO, they are also applicable to the Sukuk market. So both the government and the private sector, when they launch Sukuk, and if they are targeting retail clients, that is, non-professional investors, the SFC would have to approve the relevant products and advertisements. And for the GBP, as I said just now, now for our inaugural Sukuk issuance, we will be targeting Hong Kong and Middle East, and the investors would be institutional investors. So under the SFO, there will be certain exemptions. However, on the whole, well, with regard to Mr. Leung's questions, within Hong Kong's financial framework, now we are already protecting bond investors, and this will also be extended to cover Sukuk investors. Well, Chairman, I'm not doubting the effectiveness of the SFO. I'm sure the SFC can monitor the market. My question was about whether the SFC have adequate professionals to look at Islamic documents, because I have read these papers, and the Islamic finance market is very special. Not everybody would understand it. So if there are loopholes or gaps, we need really professional people to look at them. So at the SFC, we have this kind of experts. Yes, thank you, Mr. Leung. Well, in the past, Hong Kong has not done a lot of transactions in this area, but it's not that we didn't have any experience. Now, in the Exchange 6 Sukuks have been listed, so of course the SFC have had experience in them. As for SFC and the Hong Kong MA, they both hope that our market can be expanded. The Hong Kong MA and the SFC have also been liaising with their counterparts overseas. For example, the Monetary Authority or the SFC of Malaysia and other international academic associations in this area. Now, we may not have a big team to monitor the developments in this segment. There may not be so many products that have to be approved, but we are confident that the Hong Kong MA and the SFC would have the adequate professionals to regulate this market. I have some follow-up questions. Just now, Mr. Alan Leung asked about monitoring professionals. Now, in the SFC, well, I would like to know more. Now, for Islamic financial instruments, I think, well, you have to take some courses to learn about them. And in Malaysia, there are some universities that are offering degree programs in Islamic finance. So will you be providing training to the Hong Kong MA or SFC staff? For example, asking them to take such programs. I think just an exchange is not enough. As for the Hong Kong MA staff or civil servants, well, many of them would receive training from time to time. The Hong Kong MA has been liaising with the Central Bank of the Malaysia. We have been cooperating and on a regular basis, we would also invite experts to come to Hong Kong to give lectures. Such lectures will be given to Hong Kong MA staff and FSTB colleagues. As for more systematic courses, well, on and off we would hold seminars, and we would, also invitations will be given to the Hong Kong MA, and if Hong Kong MA thinks that the topics are relevant, they will attend. Well, but not all of these lectures are about sukuk. Some of them are about other areas of Islamic finance. Helen, do you have any other questions? Mr. Liu, just now Mr. Wong Ting Kwong asked a question. And that question is about the development of sukuk market. You have told us some of it, and can you give us a more detailed paper about the government's promotional method for the coming 12 or 24 months? Yes, we can provide members with an information paper. So with regard to the Loans Amendment Bill, do members still have any questions concerning the principles of policy? No? Do we need to invite deputations to come here, Mr. Leung? I don't think there is such a need. So we will write to the relevant organizations. If members have no other questions concerning principles or policies, then let us start the clause-by-clause examination. But of course, when we do that, you can still raise other questions. Mr. Liu? Well, I like to scrutinize both the English and Chinese versions. So you can read out both versions.
You can go for the English first or the Chinese first, but please do it simultaneously. Yes, Mr. Liu? Thank you, Chairman. As I said, since Last year, we already amended the Inland Revenue and Stamp Duty legislation. We could do it much more easily in drafting the bill because we are making use of Section 17A of the IRO to introduce the specified bond issue concept. Therefore, when you receive the bill this time, it is relatively short. If you don't mind, I will read out the clauses one by one. Okay. If you read out the Chinese first, then please also give us a little time to think about it. Yes, Chairman, this is the Loans Amendment Bill 2014. Let us look at the long title. We state that this is a bill to amend the Loans Ordinance so that money raised by the government by alternative bonds issued under a specified alternative bond scheme set up by the government is treated as money borrowed by the government and may be credited into the bond fund. To make a related amendment to the resolution of the Legislative Council establishing the bond fund, and as I said at the beginning, this is also to amend the Inland Revenue Ordinance to exempt from profits tax certain amounts derived from those bonds. This is the long title which very accurately states the purpose of the bill. Mr. Liu, please also go through the English version. Yes. In English, it is the same as Chinese. It states
Loans Ordinance so that money raised by the government by alternative bonds issued under a specified alternative bond scheme set up by the government is treated as money borrowed by the government and may be credited into the bond fund. And then we are going to make a related amendment to the resolution of the Legislative Council establishing the bond fund, and we are going to amend the Inland Revenue Ordinance in order to grant the relevant tax exemptions for certain amounts, certain profits derived from the sale of this bond.
no problem. We can carry on. Next, there are 9 clauses. The first one, short title. This ordinance may be cited as the Loans Amendment Ordinance 2014.
Loans Amendments Ordinance 2014.
This is very simple. Clause 2, amendments to Loans Ordinance. The Loans Ordinance is amended as set out in sections 3, 4, and 5. This is amendments to Cap 61, the Loans Ordinance. Let us look at clause 3. What is important is that this time around we need to tackle the definition of the word borrow in the Loans Ordinance. Since the framework of Sukuk is not the same as traditional bonds, as I said at the beginning, under the Loans Ordinance now, the definition of borrow cannot include the alternative bond kind of issue. We therefore propose to do something to the definition of borrow in the Loans Ordinance and to add the meaning of section 2 capital A bracket 2. And 2 capital A is in clause 4. We'll come to that in a moment. The same for the English. In other words, to expand the definition.
Borrow within the meaning of section 2A, subsection 2.
Let us look at the original section. Borrow 就係
meaning 咧就 include to borrow within the meaning of section 2A2， 即其實你呢個 borrow。
In other words, originally, you already have quite a broad definition of borrow. In fact, when you add a tag to it, Well, I think the original definition arguably can include what you are going to add. Is that right? You are just clarifying it. Yes, we do have to use very concrete and definite diction to include this, and that is why we are going to provide another clause to capital A to include the specified alternative bond so that we can subsume that into the definition of borrow in section 2. Alan, any questions? A very small point, please. Why is it that in such a short distance you need to use the word includes twice? Well, I want to ask the same question. What is your drafting technique? Can I defer to our drafting colleague, please? Yes, DOJ? In the circumstance, well, I agree that the word includes can include 1 and 2. But there is a string of words in the definition, so we need to use the word twice so people would know that there are two things which are being stated in the same definition, or else the meaning would not be clear. This is just to play safe. Or people may think that if we use the word just once, the word includes once, people may think that there is only one thing, but in fact we are talking about two different things. So, 2 capital A bracket 2 would be subsumed under section 2. Now, if you don't use the word includes again, will it also do? Is that consistent with the drafting of other ordinances? Have you checked for consistency of style? Maybe this is a minor point, but I'd just like to find out. This is a permissible drafting style. And there is another consideration. Let's to try to minimize any amendment to existing constructions. The loans ordinance has been with us for a long time, so we don't want to do too much to the original construction in order not to cause any misunderstanding. So we like to start a clause altogether, and so people will know we are talking about another thing instead of just expanding the original definition. Alan, no more problem because they are the experts. Mr. Liu, please continue then. Yes, Chairman. The main amendment to the loans ordinance is in 2 capital A. The specified alternative bond scheme would be explained, and we also expand the meanings of interest and principal. 2 capital A bracket 1. This section applies with if A specified alternative bond scheme is set up, which is actually the Sukuk scheme. Roman 1, with the government as the originator under the specified investment arrangement in the scheme, and Roman 2 with a special purpose vehicle established by the government as the bond issuer under the scheme. Small b, alternative bonds are issued by the bond issuer under the bond arrangement in the scheme. The bond issuer meaning the SPV. And then C, bond proceeds from the issue of alternative bonds are received by the bond issuer under the bond arrangement. And D, the government receives a sum representing the bond proceeds, whether directly from the bond issuer or otherwise under the specified investment arrangement. And then when the government gets the relevant sum, since the government has to incur cost in doing the issue, there will also be interest payment as well. Therefore, the government agrees to pay certain sums under the specified investment arrangement, which sums are Roman 1 under E, to be received by the bond issuer, and then Roman 2 to be used by the bond issuer for payment of the redemption payment and additional payments. What are these additional payments? They are defined under the IRO, which are coupon payments. In fact, they are just interest. Since for sukuk we cannot use the word interest, we would use additional payments in the existing IRO in order to capture this concept. F, the bond arrangement is a qualified bond arrangement, and the specified investment arrangement is a qualified investment arrangement. What do we mean by a qualified investment arrangement? They are all defined by the IRO, and it explains the basic framework of sukuk. And so we have used this most simple construction in order to explain the backbone to this sukuk issue, so that under the bill, sums received by the government would be regarded as monies borrowed from the issuer. And in this ordinance, the sum received by the government, as mentioned in subsection 1D, is regarded as sum borrowed by the government from the bond issuer. And references to borrow and principal are to be construed accordingly. In other words, this is a deeming provision that this will be regarded as such under the IRO and the loans ordinance. Bracket 3, in this ordinance, the sums agreed to be paid by the government as mentioned in subsection 1E, if they are to be used for payment of the additional payments concerned, are regarded as interest agreed to be paid by the government on the sum regarding under subsection 2 as being borrowed. So actually 3 expands the meaning of interest in its construction under existing ordinance. Then 4, in this section, an expression specified below has the same meaning as it has, including additional payments, alternative bond, bond arrangement, bond issuer, bond proceeds, originator, or qualified bond arrangement, qualified investment arrangement, redemption payment, special purpose vehicle, specified alternative bond scheme, and specified investment arrangement. All the meaning here should comply with Section 17, capital A of the Inland Revenue Ordinance. By adopting this drafting style, we will not need to repeat Schedule 17A of the Inland Revenue Ordinance because these are complicated concepts. We don't have to repeat all the concepts again because we would directly make use of the terms only, and if users have the need, they can make reference to Schedule 17A of the IRO. And this is very important for consistency. Perhaps I should stop here. Ellen, any questions? If not, I will go first. I'd like to ask a question. 2 capital A is actually the mainstay of the entire bill. My question is, 2 capital A 1D, may I refer to the English version? 1D.
Representing the bond proceeds. Now, whether directly from the bond issuer or otherwise, under the specified investment arrangement. Now, 第一，我想問一
First, my question is, within the bracket,
issue or otherwise, 你係想 cover 啲乜嘢嘅？
what do you want to cover under or otherwise?
就涉及咧係
Well, this has to do with sukuk issue. There will be a different product structuring under sukuk. As in the legislative brief, Annex B, that is the ijara, a leasing arrangement. We would make use of a transfer of assets with the SPV. Then we would receive the funds for financing directly from the bond issuer. But then there are other Islamic bond structures whereby there may be debentures, and the government or the SPV may set up a joint venture in order to receive the funds For the sake of clarity, whether or not we adopt a certain mode, as long as it is a sum from bond issue, then in the end, the government would be holding the bond proceeds, and then those monies would be regarded as the sum borrowed by the government from the bond issuer under the loans ordinance, and this will allow us to include all product structuring of Sukuk.
So that's why we have those words within the brackets. So it may not be the money directly get through the SPV, and other scenarios are also covered. I would like to ask some other questions for this provision for the bond process. And if you compare this with 2A, the sum received by the government, one is bond proceeds, and that is under 2A1D, and the other term is under 2A2A. In this ordinance, the sum received by the government is regarded as a sum borrowed by the government from the bond issuer. For these two amounts, under any circumstances, they are the same, these two amounts. Yes. Yes, Chairman, your understanding is correct. As for the expenses and costs for a bond issuance, which institution would absorb that? Because when it comes to bond issuance, some costs would be absorbed. Well, there may be some bond costs, but suddenly the arrangements may be changed. So can you give us more explanations? Yes, your understanding is also correct in this regard. Now, for the sum received, now first of all, it will be regarded as a sum borrowed by the government. So for these two provisions, these two sums are the same. That is, after financing, this sum of money will be regarded as a sum borrowed. Now, in the course of borrowing, there will be costs incurred for issuing bonds, and that should also be included, and that is under Clause 7. Now, we will be relying on the bond fund resolutions. Some of the money will be paid from that. This is paying the expenses incurred in relation to the borrowing. That is Clause 7. Later on, when we get to Clause 7, I will be telling you more details. Chairman, you are right. After receiving the money, it will be regarded as a sum borrowed. And at the end of the whole process, we will also have to deal with this cost incurred. So for the December 2013 resolution, the borrowing ceiling was raised to 200 million. That would cover the bond process and the expenses, right? Chairman, for the electrical resolution, there are already rules allowing us to do this. That is, when we issue bonds, we do not only borrow money, but the cost incurred would also be paid for by the surplus in the bond fund. So this is in line with the electrical resolution. I mean, would the expenditure be using part of the quota of the borrowing ceiling? Now, for example, if there is a 1 billion borrowed amount and then the expenses is 10 million, now that 10 million would be deducted from the bond fund. So the borrowing ceiling of 200 billion will not be affected. Within that 200 billion, well, so the quota would just be 10 million, right? Well, Now for the bond funds, 200 billion is the amount of outstanding GBs. It cannot exceed 200 billion. As for the principal, it will be put under bond fund, and bond fund will make investments in order to make money to pay for interest and the cost incurred by issuing bonds. We have been capable of paying all this. Just now the chairman mentioned a cost that would not be regarded as part of the total outstanding GB's amount. Now, just now you talk about bond fund investments. So are we paying out from the exchange fund, or you have another investment strategy all along? Well, actually, in the electoral resolution, this is also included. The FS will handle the proceeds in a suitable manner. In 2005, we set up the government bond program. So for the funds raised, they will be managed by the Hong Kong MA. So for the bond fund now is managed by the Hong Kong MA. And it will be handled in the same manner as the exchange fund. As for the bond fund, at present the investment arrangement is aligned with the government's investment strategy. That is, when the money is put into the exchange fund, it will not be separated. So there will be a big lump sum, and we will use that big lump sum for investments. As for the investment return arrangements, now we will look at the average return rate in the last 6 years. This is the arrangement. This is the same as the arrangement for the reserve. Any other questions? Please continue. Thank you, Chairman. We have looked at Clause 4, now Clause 5, Section 3 amended. So in the loan ordinance, Section 3 is like this. When there is borrowing, the FS can decide as to whether certain documents should be submitted to the Legislative. Now we would like to expand Section 3 brackets 4. This power would be extended, so it would not just cover bond, promissory notes, or other instruments, and it would also cover the instruments under the alternative bond scheme. We have been adopting an open attitude. Now, under the GBP, no matter whether it's I-bond or institutional investors' issuance, all the information memorandum and offering circular are open, and you can see all these on the GBP website, and the relevant documents can also be provided. Now, in the original loan ordinance, it says the FS shall call a copy of the agreements to be laid on the table of the Legislative Council. This is in the original Section 3. And now Section 3, bracket 4 says that the FS may, in its absolute discretion, exclude from the application of Section 3. any agreements or any part thereof which relates to etc. You said, well, you talked about memorandum and PPM, and all this can be found on the website. Well, for Legco, well, each time you make a borrowing, will a copy of the contracts be tabled before us? Now, ever since we started the GBP, whenever there was a borrowing, the whole act was transparent, and the market would know immediately about it, and the issuance circular would also be made public. As for the retail part, the circulars would even be distributed to banks. And on the GBP website, all the detailed information is listed, including the circulars, the offering terms, the interest payment notice, etc. All this can be browsed. Well, the relevant legal documents are very lengthy. So in the offering circular, we would highlight the salient points. So under the GBP, in the past, we didn't use the power to table the agreements before the Legco. The government will be issuing sukuk, and it will adopt the same practice. If there is a need, we will submit the relevant documents to Legco. However, because now we are already adopting a very open policy when it comes to handling the documents, and in the past, according to the loans ordinance, this was how the practice was. So in the future, we will adopt the same practice. Please move on. Thank you, Chairman. Clause 6. Related amendments. Clause 6, enactments amended. The enactments specified in divisions 2 and 3 are amended as set out in those divisions. And for clause 7 is amendment to a resolution of the Legislative Council establishing bond fund. Just now, under 2A of the loans ordinance, we talked about the sums borrowed, and now here it says that for sums borrowed in the manner mentioned in section 2A of the loans ordinance, the power under paragraph E includes paying the sums referred to in subsection 1E of that section, and, well, that sums is about the extra payments, that is interest. So for 7 brackets EA subsection 1, paying the sums referred to in subsection 1E of that section, that means coupon payments. So it allows us to pay out from the loan fund and also to paying the expenses incurred in relation to the borrowing. As for this arrangement, at the moment, the loan fund can be paid for ordinary bonds and the interest incurred, and we adopt the same arrangement. Mr. Liu. On the marked up copy. Well, this is about the 2009 July 8th resolution, right? So for the borrowing ceiling, if it's changed, would it be put here? Well, technically, there are 2 resolutions. For this resolution, it is made under Section 29 of the Public Finance Ordinance Cap 2. And a resolution was made to set up a bond fund. And through this resolution, we have established a management framework. As for the borrowing ceiling, that's in another ordinance, that is the loans ordinance. That is about the borrowing ceiling under the loans ordinance. In May last year, we made a presentation to LegCo, and a resolution was made. And the borrowing ceiling was raised from $100 billion to $200 billion. And now we are talking about this resolution, and it's about the management of the bond fund.
根據公共財
That one was made under the Public Finance Ordinance. Alan, any questions? Please continue. The last two, they are amendments to the IRO. At present, under 26 capital A, we have exclusion of certain profits from tax. And that is interest paid under GBP, and also to investors, the interest payment, and also transaction gains. All these are excluded from the payment of profits tax. We have tried to give the same treatment to Sukuk. So we add in additional payments paid or payable on an alternative bond issued in connection with the borrowing by the government within the meaning of Section 2, capital A2 of the Loans Ordinance. All these, and a profit as well. So we would exempt them from paying profits tax as we have always done. This is very important to investors. When they buy or sell GBs, and when they receive interest, they will not have to pay profits tax. That's an incentive to gain support for the GBP. This is an amendment to Section 26 capital A of the IRO. And then we have the terms additional payments and redemption payment here. And we again ask reference be made to Schedule 17 capital A of the IRO. Sorry, this may not be directly related to the IRO, but I have a question. The qualified bond, is it that we have another regime for it? Is it that there is only concession for half of the profits tax or profits gained? What are qualified bonds? Those are under 14 capital A of IRO. We encourage private bond issuers. Depending on the maturity date, we provide some exemption. The so-called qualified instruments are regulated under Section 14 capital A of IRO. What if public organizations or statutory organizations that would issue bonds, what kind of bonds would those be? They would be subsumed under 14A. Total exemption would only apply to GBs. We talk about the GBP, traditional bonds, institutional bonds, and investment interest, and also disposal payments, and also interest received, and also profits from transactions. All these would be exempted from the payment of profits tax. This is in 26A, 100% exemption is given. But then there are other kinds of exemption as well. We encourage multilateral issuers to come to Hong Kong, say, for example, development banks. We would also grant 100% tax exemption. However, that is not something we need to deal with under this bill. This time around, we only tackle the issue of Sukuk under GBP, that we give a total exemption from profits tax. Alan, questions? Please continue then. The last one, Clause 9. Since in 26A we mention additional payments and redemption payment, then in Schedule 17A Usually, in terms of legal drafting, we would say other clauses have quoted Schedule 17A, and this is for easy cross-reference. This is a technical amendment to put in 26A bracket 4. This is just for the sake of marking this for easy attention. Should be 26A2, not 4. Sorry, Chairman. Chairman, I think that's it for the bill. We have dealt with it with not too much time, since we have already got the framework under the Inland Revenue and Stamp Duty legislation, and since a lot of time has been spent on that amendment bill, and now we can make use of the framework under the IRO or Inland Revenue and Stamp Duty legislation to make drafting relatively easy and simple. So we only have 9 clauses in the bill. Thank you very much, Mr. Liu. Well, to me, if it is a bill, even there is only 1 clause, I don't think it is simple. We always have to act with caution, as with the so-called verbal undertaking. All right, we have done clause-by-clause scrutiny, and I have also told the Bureau that you need to write a paper, and then please submit it as soon as possible. We will invite written submissions on the web, and members unanimously think that there is no need to conduct a hearing on the bill. So we have completed clause-by-clause scrutiny. I will now check the timetable together with the Bureau. The clerk has told us that to report to the House, that should be on the 14th of March. If there would be any CSAs, notice should come in by the 17th of March. And I can see an empty slot. As you know, we have the budget soon, and there will not be any council meetings for 2 weeks in March. And the earliest date for the resumption of second reading of the bill will be the 26th of March. Bureau, please think about these dates and confirm them, all right? My understanding is, Chairman, the earliest date to resume the second reading debate will be the 26th of March. Yes, we are positive. We'd like to work towards that target. I will relate this to the Secretary. And if the Bureau Secretary agrees, we would like to pass the bill ASAP, and with the Bills Committee's support, hopefully we can resume the second reading debate by the SFST. Thank you, Chairman. Any other questions? The clerk, anything else? Okay, so we have dealt with the entire bill with just 1 meeting. Thank you very much, members, and also the officials for coming. Thank you very much. Meeting is ended. Thank you.